Good morning and good afternoon to all. I warmly welcome you to the 5th EMNES annual conference. This year is a virtual conference, which is, of course, organized in a period marked by the exceptional circumstances our humanity is experiencing during this COVID-19 pandemic. So the global pandemic of COVID-19 has fundamentally tested our capacity and resilience of health and socioeconomic systems to respond to high impact shocks and to adapt to emerging transitions and also to transform. So were countries across the globe prepared to face up this COVID-19 pandemic? Have they developed socioeconomic buffers to resist the pandemic effects? Were their buffers sufficient? Have they really built the resilience, the capacity to respond and to transform? What is the system that could enhance resilience? Now, the COVID-19 has took the world really unprepared. So no country has prepared itself in this situation, and they were all trying to respond with emergency approaches. Government across the globe adopted preventive and containment measures to stop the contagion, and they were really diverse over the globe. And what we have tried to do in our research during this year is really to focus a little bit on the capacity of these countries, specifically in the Mediterranean and in Africa, to better understand how those governments have responded. May I please ask the other speakers to switch off their micros? Thank you. So our EMNES research shows that most of the countries opted for policies of containment and mitigation, such as lockdown, social distancing, and so on, which were very much different in terms of timing, duration, and intensity. In the meanwhile, governments and international organizations implemented measures to cope with the socioeconomic impact of the pandemic and also to help the healthcare system to stay afloat and to remain functional. And this was not at all the case in all countries. Overall, the level of preparedness and the capacity to face, to manage, and to recover from such high impact pandemics vary significantly across countries. And also the recent research of the contagion has raised further concern about the capacity of the countries to face subsequent waves of pandemic. And actually, I must say that the post-COVID-19 state of the world still remain very much uncertain. And the socioeconomic consequences, they're not over yet. So we still have to face 2020 to see what are the real implications of the detriment that this pandemic has produced. For this reason, it is extremely important to keep monitoring the spread of the virus and the responses to it, to learn from the past experiences in order to avoid further draconian lockdowns and social distancing, because too much lockdowns and social distancing will have other socioeconomic and also health consequences in the future. And also it's extremely important not to move into more collapses of the healthcare systems, particularly in the vulnerable countries. And we've seen, for example, many countries in Africa and also in our region, the Eastern South Mediterranean, they have had some serious problems in their own countries. Now, our research, in fact, tried to provide certain recipes and certain policy recommendations to face these situations we are in. In April 2020, what we have tried to do is to propose a mutually interactive three-pillar system to contribute to enhancing systemic global resilience. In fact, in order to fight global pandemics, which are in fact external shocks. And then if we could see that this specific one has degenerated into a systemic crisis. We have published a policy paper on our website, so it's available to read. And the methodology we have developed was applied to the healthcare sector. So we had published just today a study on the factors of resilience of the healthcare systems in the Mediterranean countries with the support of the Konrad Adenauer Stiftung. So this was a very interesting application to better assess whether the healthcare systems have been resilient to face this pandemic. And the result of this study shows that this was not the case, and the majority of those countries in the South Mediterranean were not prepared, and they were facing really serious problems to deal with this high impact pandemic. Now, what we have proposed is this three-pillar system, which include the following pillars. What is important is to have an early warning system. An early warning system which should be generally globally coordinated, which was not necessarily the case, although there were some sort of awareness of the pandemic at a global level, spearheaded by the WHO. It is extremely important to have information transparency and disclosure from all countries in terms of the prevalence of the pandemic, and also all the protocols that have been used during this period. And also, if possible, to have all the matrices to measure and evaluate with certainty the local and regional nature of this health risk faced by all those countries. And obviously, capabilities, infrastructure, medical staff, and all of this is key to face the shock. And that has been in many countries happening, for example, in Europe, but not to the highest extent in the South and East Mediterranean countries. Again, the WHO has played an important role within its specific mandate, but most probably more information, more early warning systems locally have to be developed and put in place. Now, the second pillar that we have proposed for this resilience system is a global crisis management system, which is really globally coordinated, and it really activates global policy responses to mitigate those shocks. And this is really linked very much to, for example, how to enhance the emergency responses and how to ensure it is enforceable and it is coordinated locally and, if possible, internationally. Now, of course, to activate this crisis responses, crisis management response, we need funds, and these funds have to be organized not only locally but also, if possible, internationally. I guess the G20 here could play an important role going forward, and even along the management of the pandemic. For the third pillar is recovery. And this is really go beyond crisis management and recover for future, to be ready for future pandemic. And again, it's important to have investment plans to strengthen the healthcare systems, but also to enhance the research and development, and also try to find more agreements in terms of public and private sectors to upgrade, for example, the digital infrastructure, and also to move forward in more digitalization of healthcare services and so on, and also education and training. Again, for recovery, we need funds, investments, and this have to be very carefully designed and thought. And we made the proposal to create what we call a global fund to help countries in need to recover from the global pandemic. So this is the proposal we made, and let me also just say that the Euro-Mediterranean Network for Economic Studies, under the coordination of the Euro-Mediterranean Economists Association, stepped up very much its efforts toward open evidence-based policy research. And in a nutshell, to summarize, the countries that exhibited socio-economic vulnerabilities prior to the pandemic had lower capacity to mitigate the effect of the pandemic. So in fact, countries that have built a resilient system could better respond to the pandemic and rebound. So the proposal we made, in fact, applying it to the South Mediterranean countries, it is clear that at least for the healthcare sector, this sector was not resilient enough to face this high impact pandemic. Now, several other pillars, for example, including digitalization, financial inclusion, social protection, safety net, regional integration, for example, via regional value chain. We know very well that during the pandemic, the supply chain globally and trade has been disrupted. So this is why it's important to have clear mechanisms to ensure that the global value chain, they are not disrupted during pandemics the way we've seen it over the last months. So we have tried to explore within our EMNES research to offer economic policy answers, and also on the design of recovery models post-COVID-19. Now, against this background, the EMNES Annual Conference 2020 aims to discuss and to disseminate the results and the conclusion of the work accomplished over the last months. And also this work has been under the umbrella of the Regional Policy Research Initiative on COVID-19, launched on the 18th of March 2020. Now, the program of our conference these 2 days is broken down into half days. So we start the first day today. And today we will explore the latest work we have done on the socio-economic impact of COVID-19 and pillars for recovery in Europe, factors of resilience, financial inclusion, and digitalization. Tomorrow, we will continue to delve into those factors of resilience with a focus on social protection safety net, a zoom on regional integration via global value chain, and also on the future of labor market, education and work. And we have a specific session on banking finance. Now, I would like to thank very much the EMNES partners, researchers, fellows, for continuing their work and commitment to the network, despite these exceptional circumstances. So we would have liked to see you all in Barcelona, as that was the plan. But unfortunately, because of these disruptions, we had to have this annual conference virtual. But also, I would like to thank EMEA, Euro-Mediterranean Economists Association, and its foundation for allocating the necessary resources for coordination, research, and communication. This year has been, in fact, I must say, an exceptional year for EMNES. We produced a lot. I mean, we tried to really respond to this exceptional situation of COVID. And then we have produced 5 joint studies, 3 of which related to the COVID, and more than 20 policy and working papers dealing with topics related to this conference. including also research on COVID. In March, as I mentioned, we launched jointly with the EMEA the COVID-19 policy research open access platform, which is open access to everybody to monitor the policies that have been implemented in these countries. And we have also looked at Africa as well. And there what we're trying to do is to continue monitoring the policies of containment, decontainment, recontainment, and also the consequences and the level of preparedness of these countries. And today I'm very pleased also to launch the annual EMNES conference interactive platform. So we have an interactive platform that it's on our website. And all the information that you will have over these 2 days, it will be published on the platform. So on the logistic of these 2 days, the conference content and discussions are public and are live broadcasted on Facebook. So the teams will later publish the recordings of the conference on the official EMNES annual conference website. Now, for the participants, please write your questions if you have and comments on the Q&A box, and all the speakers on the chat box. Now, I would like to start. Today, I'm very happy and deeply honored to introduce Daniel Gros for the keynote speech. Daniel Gros, he's a distinguished fellow and member of the board of the Center for European Policy Studies. Daniel, I worked with Daniel at the Center for European Policy Studies when I joined since 2001, it's many years ago, it's almost 20 years ago. Daniel has been the director of CEPS from 2000 until recently. And he has been, I would say, the idea engine for European integration since the 80s. I think he has contributed a lot, and he's still contributing a lot on all the topics of European integration. I think his contributions were extremely impressive during the financial crisis, and this was really a very important contribution he made. Over the last decade, he has been a member of high-level advisory bodies to the French, Belgian governments and many other governments. Also, he has contributed a lot to the Greek crisis. Also, he contributed at the highest level in US and UK and others. Currently, he is an advisor to the European Parliament and was also a member of the Advisory Scientific Council of the European Systemic Risk Board for the European Central Bank till June 2020. And prior to CEPS, he also worked at the IMF and at the European Commission as an economic advisor to the Delors Committee. That developed, in fact, the plans for the euro, and Daniel wrote a lot about the euro and the monetary policy. So I must also say that Daniel has been a great pillar for EMNES' birth in 2014, when EMNES received its first grant from the European Union from 2014 to 2019. And the grant was managed by CEPS under the leadership and the advice of Daniel. Daniel, with great honor and pleasure, I would like to give you the screen for your keynote speech.
Thanks a lot, Rim, for this very nice introduction. You have also contributed a lot to CEPS over the years, being the driving force behind this very nice group, dealing with a very important part of European external relations, namely the Mediterranean. When you were listing all the things I have done, some of you feel old and wise, but it shows basically also that policy can make a difference. not perhaps always immediately, but over the long run, it makes a difference. It makes a difference when it creates structures which, in the case of the EU, after some shocks, proved to be resilient, because whenever there was a shock coming along, something was done to make them resilient, not necessarily because the structures themselves were ideal from the beginning. And that's perhaps the very first important message one has to keep in mind. It's very difficult to have structures which are designed to resist everything. That's what we call incomplete contracting in economics. But you have to have then the political will to do the necessary to preserve order and institutions which have been useful in the past. So you asked me to give a brief picture of the socio-economic impact of COVID on Europe. And of course, we all know there has been a huge economic shock, disastrous second quarter. Fewer people talk about the recovery, which has been very strong also in the second quarter. And actually, I would expect that recovery to continue. But when we talk about recovery and when we look at GDP numbers, we know that in this particular case, actually, things are different. Because it's a very sectoral, I was going to say crisis and recovery. Perhaps the crisis was, in the first instance, everything down. Industry, services, everybody was shocked. Some partially shocked and partially were just told to stay home. So they couldn't consume except the essentials. And sometimes even some countries they were forbidden to produce. And then I think most of that shock has been more or less compensated for, has been recovered, not fully, but I expect that to happen by the end of the year. But, and I would say this is really new, there's a part of the economy, a very visible part of the economy, and maybe very important for the feeling of welfare of many people, which is still under difficulties. And that's, of course, tourism, services, restaurants, and similar. They're very visible, but if you look actually at the numbers, their contribution to GDP is quite low. In Germany, it's estimated to be about 5%. In Italy, it might be 10%. In other countries, perhaps in the Mediterranean, it might be even more. So that is the first point to keep in mind when you think about this recovery, especially perhaps less for the recession. It is very special. There are some sectors which will take more time to recover than others. And we don't know yet whether this recovery will be full or not. I think for tourism, we hope that things will be normal perhaps in 1 or 2 years. That's a hope, it's not a certainty. Whereas we can already see now that for most of industry, these restrictions which we have right now and foreseeable restrictions are no longer a very important obstacle to production. So we have this dichotomy between this one part of the economy which is doing well, which is, let's say, 80-90, and then the rest which has difficulties, a mixture of because people are afraid to travel and to go to restaurants, and because they're not allowed to. My own research suggests that actually that the second element is more important, that governmental restrictions are more important than the fear factor. If you're interested, we can discuss that later in detail, but that is at least what comes out of some regressions which we have done when we have looked at the impact of governmental restrictions on GDP, which are very strong and almost immediate and last for a couple of months. but the state of the disease itself does not seem to have a very strong additional impact. So that is, I think, what we can say about the economy. I would expect the recovery to continue for 85–90% of the economy, depending on countries a little bit, and to be very hesitant and partial for the rest of the economy. And the rest is, of course, as I said earlier, tourism and similar leisure services. Now, initially, the economic crisis was also accompanied by two other crises: the financial crisis and the political crisis at the European level. Now, the financial crisis was very short, and I think basically because central banks and everybody else had learned one lesson from the last crisis: you have to intervene quickly, and you cannot allow doubts to arise about the solvency of systemic operators, especially banks. So the ECB, every central bank in the world, the Federal Reserve, pumped in billions and billions just to make sure we will not let anybody important go under today. And therefore, the financial crisis was over pretty quickly. What lasted a bit longer, at least in Europe, was the intra-European political crisis. The feeling that there might be perhaps a shock to everybody, but not everybody was affected to the same extent, and that the stronger were indifferent to the fate of the weaker, and that the weaker thought that this was unjust. And that crisis, or that conflict, was, however, resolved in retrospect, one can say, quickly, right, in 3 or 4 months. Of course, when you're in the crisis, it feels like an eternity. With the agreement basically between France and Germany was it June already, that there would be a special fund financed by common European debt issuance, and that fund would not only give countries credits, but also transfers. So it's different, right? Credits will be paid, but just transfers, full stop. And that proved to be a watershed. It proved to be a watershed because it expressed the solidarity. It provided another fill-up for financial markets to come down. Risk spreads went down. And it represented basically Germany jumping over 2 of its own red lines. The first red line was that within the euro area there should not be gifts, there should not be transfers, only credits. That was in the euro area. And here the little difference is that it's in the EU. And that for the Germans, I think, is easier to accept, because in the EU there have always been some transfers, as opposed to within the euro area. And the second red line was there would be no common European bonds. And so these 2 red lines were crossed. And what happened with public opinions in Germany? They yawned. Okay, done. Okay, next thing, please. So nobody much noticed, and was no outcry from nobody almost. It's now accepted wisdom. And I think that is, one has to give Chancellor Merkel, that she prepared in such a way that this is no longer a big concession of Germany and it has to be repaid. No, this is the new policy on Europe. And now I think nobody would have expected that a German presidency would have as its first priority to get an agreement on a fund in which Germany pays basically 40 to 50% to the rest, right? So you can see that under the impetus of a crisis, countries can change their policies. Now, I would warn against the assumption that this fund solves all economic problems. For Italy and some other smaller countries, EU member countries, it provides a very important transfer. can be up to 10% of GDP. I mean, 10% of GDP as a transfer, not as a loan, right, is enormous. And that's, of course, an occasion, but we know the resource curves, right, the national resource curves. We know that if governments get a lot of funding, it can be just another impetus for political infighting and corruption, or it can be well used. That's a challenge which comes, especially for larger countries like Italy. Italy receives a smaller percentage in grants as a share of GDP, but still it's important. And that is a challenge, the outcome of which we will know in a couple of years only. And at that point, we will see whether then the Germans and the others think, was this a deal worth having done or not? But that's not in the hand of Brussels, because you can direct the use of these funds, perhaps, but you cannot direct from Brussels how the country evolves, how all the other financial resources of the countries are being used. And that perhaps brings me to the issue of resilience. If they have learned one thing from this crisis, especially when you have an unexpected shock, resilience basically means concentration on 3 or 4 factors which we knew from the past, right? You need an efficient administration, right? That if you have a proclamation at the top, something has to be done that actually it's being implemented down below at the coalface to our citizens. The bottom, which the politicians can push, has to somehow have behind it a machine which works. And we see in some countries it works better, in others it works less well. And that starts with simple things. You want to distribute money to citizens who have been affected. How do you find out who has been relatively affected and needs the transfer and others who don't? Right there, you need some simple criteria, but also, again, you need an administration which can implement that. In that sense, perhaps Germany was fortunate because you have a cascading of administration from the federal level, which does actually very little in terms of implementation, to the Länder. Okay, but a land like North Rhine-Westphalia has 15 million people, that's a mid-sized country, and then down to the communes and so on. All this machinery has to work, and it works pretty well. The second point is, of course, that all has to happen in an environment, political and social environment, where you don't have a fight everybody against everybody. If you have an opposition which says everything the government does is bad, right, that doesn't work, right? You have to know where to stop the political fight and where to get consensus. It also means that the government has to listen to the opposition, right? This is a two-way thing. So you need a social political system which favors consensus, without, of course, stifling discussion, right? That's quite clear. Pure top-down doesn't work. And finally, this I cannot avoid saying as a German, having a low debt level helps. This is ultimately why you want to keep debt low, because you want to be prepared for when you're hit. And that's actually the German finance minister has emphasized that several times, because people say, Germany has changed fiscal policy. No, the famous black zero of German fiscal policy in the past was explicitly meant to provide then the situation in which Germany, if need be, can spend. And in this crisis, the German government can spend. My taste is spends even a bit too much, but that's something else. But at least it doesn't have the problems other countries like Italy have when they're already at the limit of what financial markets will take. So these are the factors which I see important for resilience. On Euro-Mediterranean relations, let me see, I can see one positive and one negative factor. The negative factor is obvious, tourism. Who knows when it will recover, how it will recover. If it's just 2 years and after that it continues, it could just be hiccup and then it could continue, but that is not for me. What I think, however, has to happen is that the offer of tourism has to be modernized, made available via digital means and all the things that you probably know, but that was already known before the crisis. And the second point, there's an opportunity. Home office will stay. But home office can also be done on a nice beach. It can also be done by people somewhere else. If they're the same time zone, it helps. But to do that, you have to have, of course, a digital infrastructure at home. And you have to have a digitally savvy population, young population. They have to be well educated in languages and in the digital skills. And if that's the case, I think the Mediterranean could profit. You see it a little bit in Eastern Europe, where computer science has long been a strong point in the education and university system. But maybe it's time that the Mediterranean also starts to educate its youngsters in these skills. The returns could come actually pretty quickly in 3 or 4 or 5 years. Okay, that's for me quickly. For politicians, maybe it's a long term. But I think that is something which represents an opportunity which should be taken, because I'm afraid the old-style, low-wage industries will not provide much employment for very long. Grim, that is what I had to say. And apologies, please, I have to be clear about this. I have to leave at 3:30 sharp.
Thank you very much, Daniel. I have a couple of questions and I'll let you go. This is very interesting and it really confirms also my thinking about what is happening during this month. One first question is about what is your view about green growth? I mean, the European Union is pushing for a recovery via green growth. And this could also be a model for the Mediterranean, specifically in terms of the partnership or the new economic partnership that the European Union is trying to devise with Africa. So what is your thought about this?
I must say I'm very skeptical about this green growth. Sorry. There are technical points because the criteria, what constitutes green, are really sorry, a joke. I mean, I don't want to go into the details. Basically, member countries can just say, sorry, there's an ambulance outside here. Member countries can just say, this project, which I ask you, Brussels, to finance, contributes to climate change, and therefore, please account it that it is 40% green. Right? So, okay. The real policy in Europe is the ETS. European Emission Trading System, where you have seen prices increasing, and there could be an occasion for the Mediterranean because, I mean, sun, right, is more reliable the further you go south. I know that there are more and more interconnectors, right? There is some possibility to use the sun to produce hydrogen, right? Which is easier in some respects to transport, more difficult, but more storable, right? So I think in this area there could be cooperation, and this is cooperation I think where actually governments should intervene, because you require feasibility studies, connectors, structures, and so on. This cannot all be done by the private sector, whereas I think in the EU the private sector should bear the burden. I think in relation to Mediterranean there are things that could be done. But of course, all these are very capital-heavy investments with a long payoff. That means you have to have political stability. If you're afraid that 5 years you build this big desert tech, right? And 5 years later you get some guerrillas to blow it up, right? That's not possible.
Thank you. My next question is about, would you see COVID-19 an opportunity for further fiscal and economic integration for the European Union?
I am skeptical again, sorry. I think first we have to see whether it works, what we have now, right? I don't see any country willing to give up its fiscal sovereignty. Remember, I mean, I said you get 5% of GDP, right? But that means 10% of your government revenues, right? 90% of your revenues are still local. And whether you increase one tax rate by 1 percentage point or another tax rate, right? Endless political fights at home, that cannot be determined at the European level. The only area where there might be some convergence is corporate income taxation. But here again, I think the headlines are very big. The real problem lies below basically what you consider to be a profit which has to be taxed, right? And there you can have 27 countries and 54 definitions of what constitutes a profit, what has to be taxed. So I think some incremental progress along these lines, taxation, might be possible, but not more over the next generation.
So what do you think the lessons are that from the COVID-19? So what can we learn after this, I would say, global shock, in fact?
I think, what do we want to learn? And here I see the danger of a confirmation bias. So the fiscally frugal say, we have learned, right? Look, guys, it pays off to be fiscally frugal, right? Because then you can spend when the necessity comes. And that's the north of Europe. And the Italians say, look, interest rates are zero, we can spend even more, right? Comma, and by the way, if we are really in deep trouble, the cavalry comes to save us. So I'm afraid about this, it's not everywhere. And my prediction is that the countries which got a shock and say, we don't want to be caught unprepared a second time, they will perform much better in the medium to long run than the countries which say, okay, to hell with that.
So according to you, remain vigilant, so not to think that this is all going to last, especially the low interest rate. My last question to you, I let you go, is what do you think the impact of what you have mentioned on the Euromed side, the negative and the positive point, on migration? So do you think there will be an increase or decrease or probably complete change of dynamic of migration, or even the whole concept of migration?
Sorry, again, I would say once this COVID story is over, assuming it is really over, right? Combination of vaccines and everything else. I would say we come back to the same old problem. And I come back again, the quality of education. It's one thing to have people coming into your system who have a high level of education, who can find a job, well-paying jobs, and basically then disappear and integrate. Disappear in the sense that, right, they're not standing out from the general population. But under-educated youngsters who then have a tendency also to use for illicit means to survive, they only create problems.
Okay, thank you very much, Daniel, for a very nice keynote speech. I think we understand clearly that the factors of resilience are in fact, the old factors of resilience, which are, as you mentioned, efficient administration and implementation. In fact, it's very important to know how to distribute the money. I agree. I think this time the banks have worked quite well. I mean, they were a good channel for this. Now we need to monitor and regulate them. Now we need to go back to normal regulation. That's very important too. And the second is political harmony, I think, and responsibility. I think you mentioned it very clearly. In our regions, Mediterranean, unfortunately, this is not always possible. And third, debt. And I absolutely agree with you. And we, as you know, that we have launched this initiative on debt transparency. Nowadays, the level of debt has increased dramatically, especially in countries in Mediterranean and Africa. And with the whole debate of the debt relief, this might lead to what I call moral hazards over time, so which is opposite to debt sustainability. That is why it's important to move into more transparency, more monitoring, and I absolutely agree with you on this. Of course, digitalization is a pillar of resilience, so more infrastructure, more investment on digital infrastructure is important too. And thank you very much, because this is really that's how we also are trying to move the research on EMNES, and this only confirms. And thank you very much for your time. and I hope to see you face to face one of those days. Thank you.
Okay, great. Thanks. Bye-bye.
Bye-bye.